Major Bitcoin breaking news. The US government just gave the banks the green light to jump headfirst into Bitcoin transactions. And guess what? They're not just dipping a toe. They're all in.
They are all starting to issue credit against either Bitcoin or against Bitcoin derivatives like IBIT. And so there's a sea change here.
Yesterday, the OCC, that's the Office of the Comptroller of Currency, released a letter confirming that national banks can now act as crypto intermediaries. Basically, banks can buy and sell Bitcoin for you without even holding it on their books. But here's the plot twist. This isn't banks doing you a favor. They're bending the knee to Bitcoin and, surprisingly, to Michael Saylor. But why now? Let's break it down.
We are doing a limited pilot program that has important guardrails that are in place because we've seen with the events that have happened on offshore exchanges that it's more important than ever that Americans deserve safe U.S. markets under U.S. regulations. So what we've done to structure this pilot program is that if you are using a CFTC broker, which is what are our futures commission merchants, those are registered by us, those are overseen by us and the National Futures Association, which is like FINRA, you will be able to use Bitcoin, Ether, and USDC to collateralize contracts that are denominated in those Bitcoin, Ether, or USDC. And it's basically in-kind collateral, so that's very limited in what you can do. You can't use it instead of cash, for example, but you can use it to collateralize those in-kind contracts. And then we are putting into place enhanced
just to
monitoring.
clarify, it's in-kind, so Bitcoin for Bitcoin, or could it be Bitcoin for Ethereum?
Bitcoin for Bitcoin. So if you're going to settle in Bitcoin, it's denominated in Bitcoin, you can collateralize it with Bitcoin because it's the same way risk. And we have enhanced CFTC monitoring and reporting in place. So for 3 months, we are requiring that we not only get weekly position and asset class reporting, that's on top of the normal reporting that our exchanges do, but we are also asking for a reporting of any significant operational issues relating to that digital asset collateral. So again, this is a safe way to understand the technology, to understand the uses for these assets, but in a controlled way.
Here's the exact release from December 9th. Banks can now facilitate crypto trades as riskless principal, meaning they match buyers and sellers instantly, just like a broker. No inventory risk for them. They must do it safely and soundly. But this is massive because banks were scared of Bitcoin for years, and now the regulators are basically saying, go for it.
Wall Street, the banking establishment, and the regulators have all endorsed Bitcoin as digital capital.
And boom! Whoa! The same week, PNC Bank announces they're letting high net worth clients buy actual spot Bitcoin directly from their app.
The integration, which is limited to Bitcoin trading for now, allows clients to access Bitcoin directly within PNC's digital banking platform, removing the need to open or manage separate crypto exchange accounts.
By the way, this is not ETFs. This is real Bitcoin. This is the first major US bank to offer this, but only for rich clients who qualify. We'll come back to why that's shady in a minute. Michael Saylor, Bitcoin's biggest cheerleader and maybe the smartest man in the world, literally called this at the Bitcoin MENA conference in Abu Dhabi.
All of the large banks in the United States have gone from not banking Bitcoin 12 months ago to, in the past 6 months, I have noted and been approached by BNY Mellon, by Wells Fargo, by Bank of America, by Charles Schwab, by JP Morgan, by Citi. They are all starting to issue credit against either Bitcoin or against Bitcoin derivatives like IBIT.
He listed 6 of the top 10 US banks now issuing credit against Bitcoin. A year ago, 0. Why the sudden 180? Why now?
Why?
Simple. They finally see the opportunity to make bank, pun intended, off of you.
Bitcoin has emerged as the digital capital base of the entire crypto economy. It's emerging as the digital capital base of the world. What's the killer application for a Bitcoin treasury company? It's to issue digital credit. Right? Instead of issuing credit on gold, which is how the world ran for 300 years. Now we're going to issue credit on digital capital. Digital credit on digital capital. That's one branch of this industry. How big is it? Hundreds of trillions of dollars big. Very big. What does it compete with? Real estate, art, gold, private equity, public equity, bonds held as a store of value. All wealth, right? That is a branch, and that is going to grow.
Banks aren't holding Bitcoin for fun. Bitcoin naturally produces immediate yield through appreciation. Saylor calls it digital credit, and his strategy, if you will, is converting long-term capital into immediate cash flow.
All digital credit is better than all conventional credit. Why? Because the collateral is appreciating and it's digital, and conventional credit is built on depreciating, collapsing collateral, whether it's a data center or a product or a warehouse. And it's all indexed to the risk-free rate, which is repressed by most central bankers.
Not only do banks benefit from Bitcoin's built-in yield when they hold or lend against it, but they found a gold mine, selling you repackaged Bitcoin through ETFs, custody, or wrapped products. They charge fees, take spreads, and profit while you get paper Bitcoin. Now let's talk about PNC's announcement. It's the perfect example of what I'm talking about here. They're giving qualified, aka rich, clients access to Bitcoin ETFs on spot trading, but inside their platform. It's literally just an exchange, but rebranded. Meanwhile, and this is just a little secret in case you didn't know, anyone can buy Bitcoin, real Bitcoin, right now on an exchange and withdraw to self-custody. No intermediary necessary. They're taking advantage of your laziness, and you don't want to learn how to use a wallet? Cool. Pay them fees forever and never truly own your keys. Your true superpower as a Bitcoiner lies in your self-sovereignty. Why should any third party control your money, and why should any third party control your data? This is my data broker report. 11 pages. 11. They know every old address I've lived at, phone numbers, family members, even what kind of car I drive. It's insane. That's why today's video is sponsored by Aura. Scammers, spammers, even stalkers can just buy your personal info, and it's totally legal. And so dystopian. Aura hunts down data brokers selling your info, gets them to take it down, and keeps it off automatically. You don't have to go full off-grid Bitcoin mystic and live in a Faraday cage, because Aura lets you keep your modern life and your privacy. Aura has packed it all in: real-time dark web and fraud alerts, a secure VPN, antivirus, password manager, 24/7 US-based support, and $5 million in identity theft insurance if anything goes wrong. No other privacy service gives you this many tools for the same price. Protecting your Bitcoin in self-custody is necessary, but protecting yourself? That's non-negotiable. Go to aura.com/simplybitcoin and take your privacy back. All right, Aura protects you, but now let's talk about protecting your Bitcoin future. Because stacking sats gets a whole lot easier when your miners are working for you and not against you. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoiners first. You can own a state-of-the-art mining rig, plug into affordable carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, and no worries. Saz doesn't tack on extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on a clean and simple revenue share. They only earn Bitcoin if you are too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining proves it. Let's just say that if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing.
Banks in the world to embrace crypto, to embrace Bitcoin in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months, right? We have announcements. Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be, I couldn't get a loan against Bitcoin from any major bank. And now, if I counted the top 10 banks in the United States, 8 of them are actually engaged in crypto lending. And they've all flipped their stance in the last 6 months.
We all know Gandhi's famous quote, which was actually not Gandhi's quote. It's by Nicholas Klein. But first, they ignore you. Then they laugh at you. Then they fight you. And then you win. We're actually entering the then you win phase, but only if you act. We have to resist their psychological games. It's too complicated. Only for rich people. I can't even afford a full Bitcoin. You don't have to. Let us handle it for you. Those foolish games are tearing us apart. When people ask what's the most powerful thing you can do, it's owning Bitcoin in self-custody. PNC says qualified clients only, but again, you can just buy real sats today. No permission needed. I honestly can't even believe that needs to be said, but here we are. Withdraw from the exchanges to a hardware wallet, maybe a BitKey. And when you do, you'd be freer than any bank client. If you're new, start small. Maybe download a hot wallet. Try to buy on non-KYC exchanges if possible. But whatever you do, get comfortable taking custody of your sats and your future.
Get yourself a Bitcoin wallet, learn how to self-custody, write down and protect the seed phrase and all the other moving parts making up that wallet. Move a small portion of your savings into Bitcoin to start. Do not leave it on an exchange. Do not engage a third-party institution thinking they can protect it for you. Take it off and secure it 100% yourself. And of course, stay informed. Be on top of the news. Ignore the noise. Look, this isn't fear-mongering. This is simply preparation. If you think it could never happen here, that's what people always say right before it does. And here's the plain truth, nice and simple. A financial crisis can lock you out of your bank account. You will be told it's temporary. You will be told to trust the system. Don't. Trust yourself, diversify, keep cash, and own Bitcoin in self-custody. Because when the system freezes, the ones who planned ahead will be the only ones still moving. And when everyone else is waiting for permission to touch their money again, you'll already have yours. That's real freedom. That's real wealth. And that's why this matters.
Before we wrap up the show, let's bring it home with a special message from our friends at Ledn. If you're stacking sats, you need Bitcoin-backed services you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest. No credit checks, funds in 24 hours, no monthly payments, repay whenever you want, 0 penalties. And their proof of reserves, verified every 6 months, keeps them transparent. Ledn lets you unlock liquidity without selling. Sign up through Simply Bitcoin for 25 basis points off your first loan. Scan the QR code or click the link in the show notes below to get your discount today. Now, let's wrap this up. This OCC letter and PNC's moves are just one more of the dominoes falling. And this year has shown us the historic 4-year cycles might be over. We could be on the verge of an extended bull run where the price of Bitcoin, while yes, volatile, goes up forever, Laura.
It's going up forever, Laura. Forever.
Bitcoin to 200K in 2026? With this scenario? Seems like a no-brainer. So let's see. What do you think? Are banks becoming benevolent to Bitcoin on-ramp providers, or are they the same old opportunistic bloodsuckers just profiting off of the peaceful revolution? Drop a comment and let me know. If you enjoyed this video, smash the like button, hit the subscribe, and turn on the notifications for the most fire Bitcoin-only news in the space. I'll see you in the next one, so remember to stack, slay, and stay bullish, baby.